Hello and welcome to eOption. Uh, my name is Scott Berry. I'm a trader on the trade desk at eOption. Today we are going to be covering a type of order called OCO. OCO stands for one cancels the other. Why you would want to place something like this, it gives you some flexibility when you purchase a security to simultaneously place a limit and a stop order, in essence, bookending the position to, if it reaches your target of, let's say, 10 points or 10% higher, it will sell and then simultaneously cancel the stop. And then the reverse is also true. It gives you a protective stop below if the stock doesn't move in your direction and you're stopped out, and then the upper limit would be canceled. So let's go to the positions and orders screen. You can see we have Apple position in the account, 100 shares. I've gone ahead and currently placed one. It shows down here as Apple cancels Apple. Now I will go over the components of it, and then we will then place another order with the Intel position. So as you can see, after I've opened up the folder, it shows two sell orders in there. Our upper sell order is selling the 100 shares of Apple about 8 points higher at 160, good till canceled. See, Apple's trading currently at 151. And the secondary order is to sell the 100 shares of Apple at a 145 stop, good till cancel. Now, you can modify these individual legs. As you notice on the right hand side, you cannot cancel one or the other. In order to cancel the order, you would cancel it as a whole, which is this X button here. So if I click this, it would go ahead and cancel both orders, and I will do that shortly. But let's say you wanted to modify, you're feeling bullish, Apple was moving in your direction, and you wanted to raise your one side or the other. In this particular case, we're going to raise our upper limit, and we're going to change. You would click this double arrow, and to replace our limit from 160, we'll move it up to 162. Verify, trade. Now, when you look into the folder of both orders, we're now selling on the upside at 162, but our stop is still working at 145. And again, you could also do the same with the stop. You can move the stop from 145 to 147, verify, and trade. And now we've moved both our upper and lower orders up $2 on a limit and a stop basis. Now, if for some reason you wanted to just outright cancel this order, maybe you didn't want to have both in there, you would click the X button over here and then click cancel order, and it will go ahead and cancel both of those. And now when you look in here, everything is grayed out because you can no longer modify it or make any kind of changes. If you wanted to put this order in quickly again, if you've changed your mind, this is a handy little button. The square will actually replace everything that you had identically, and you can then make changes, of course, and you would hit verify, hit trade, and we've now reinstated that exact same 162, 147 stop on Apple. Now, let's say you wanted to place one of these orders from scratch. You don't have any order on the screen. So let's select our other position, Intel. Intel, when you go ahead and click the symbol, is probably the easiest way to place an order on our system. It will give you a order ticket, and it defaults to a simple or just a standard order. So in order to get to OCO, which is one cancels the other, you would select that button. It will open up a second window ticket. Now you can see it still has Apple in here. You need to make some changes. Intel. and 100 shares. Now, you want to see where Intel's currently trading at 28. We need to designate this a sell. Let's put our upper sell side for Intel at 35. Duration would be, if you leave it as day, obviously the order would only work for today's trading day. Since we're putting it kind of far away, we're going to do a good till cancel. Changing this to good till cancel will also make, by default, the secondary order good till cancel. If we change it back to day, you can see it changes it. Now let's see, on the second leg, you do have to also designate it as a sell. You can choose your stop or stop limit. We're going to just put a standard stop. And in this case, Intel's trading at 28. And if it gets down to, let's say, 25, we would want to stop out of the position. So once everything looks good on the screen, you've got your upper sell limit, your lower sell stop, in essence, bookending the stock position with to the upside and to the down. We would then click verify. On the verification screen, it will go over both orders one more time, just to give you a chance to review everything. So again, we're seeing 100 shares of Intel at 35 limit, good till canceled. And our secondary order, as it says, if one order is executed, then the other is automatically canceled. The other order would be the 25 stop price. Once you think everything looks good, you would hit trade. It will place your order. And now we have two OCO orders working on this account. One is for Intel, which we just placed, and the other was for Apple, which we reinstated. And again, if you open the folder, you can see what your individual leg components of the OCO are. OCO is a very good way if you purchase a stock and you have certain goal, maybe 5 points or 5%, you can put in the calculation and sell to the upside, and then also simultaneously have the protection of a stop. And if one or the other executes, it will automatically cancel the other order. If you have any questions, you can always call one of the traders at the trade desk, and they would gladly help you place this type of order. Thank you for watching today. And again, I'm Scott Berry from eOption on the Option Trade Desk. Thank you.